Ready. All right, today I want to discuss with you something very simple. You've noticed that my late trainings have been very straightforward trainings. I get to talk about principles of Royalq. What is going to make you profit more in Royalq? I have noticed that of late, they are my friends that have started using the strategy I've been sharing with you. It's working for them. However, there are people who have capital. I know they have capital, very good capital, not really very good, but they have good capital, like $1,000 and above. I can call that good capital, reasonable. And they are making small money, yet they can make much bigger money. So the challenge comes in from here. This is what I'm going to start with. So you have capital, reasonable capital, but the profit, to me, they look small. I know you can do something much bigger. Okay, you can do something much bigger. So if you are not making consistently at least between $5 and above, okay, with $1,000, there is something that you are missing. Number one, this is what I think you are missing. You are not being consistent. Okay, this is the first thing. You are not being what? You are not being consistent. And when I say consistent, this kind of strategy I shared with you, it is a kind of strategy that would make you money, but at the same time protecting your capital from getting stuck in the market. All right? Avoiding floating loss and making sure that you profit every day. So far, I haven't got someone who is stuck in a trade for a long time, because unless your capital is very small, okay, the kind of strategy I've shared with you, I've stopped sending signals, because what I am teaching you, you can make money without receiving signals. As long as you understand how it works, you have to receive signals. Please mute your microphones. All right. So here's the thing. If you are having capital, even $500, okay, even $500, if you are having that kind of capital, but your profit is less than $5 a day, I'll tell you clearly that number one, you are not being consistent. And with consistent, this is what I simply mean. You set a trade, you are setting one trade, and when it sells, you don't go back in the market. Okay? So, consistency, I simply mean when you enter a trade and you sell, the robot sells, give it another trade, enter the market again with the kind of strategy I gave you. If you are having more than $500 and you are not making $5 and above a day, either you enter the coin that has stayed, and when it stays, if you take longer in the market today, I expect, these are my two expectations. If the day goes and you didn't make money, it is either that coin is going down and the robot is buying for you the margin calls, or you enter a trade and you leave it, you don't go back in the market. Okay? The strategy I shared with you, I told you, it does one thing for you mainly. However, you can kill two birds with one stone. It gives you daily profit, but also protects your capital. Sorry, altogether, it protects your capital. So your capital won't get stuck with that strategy that I shared with you. Which strategy? The martingale. I don't know if this is the spelling, I guess so. Martingale strategy, where you double up your orders. Every time the market goes down, you double up your orders. You double up your orders. So today, we are going to quickly look at what you can do. I'm going to bring this understanding so that, you see, what I need people to do is to understand the business. When you understand, you are going to be able to really set up your things without anyone being on you. Let me just share these screenshots on my whiteboard so that you can see things clearly as I talk about them. So this is how. Where is Royalq? All right, we have Royalq here. Okay. There we go. There we go. I think I should just bring one. These ones are going to kind of so there's someone who asked me to explain something, so I think I'm going to let me start with that. So I've took some screenshots to make my life easy when I'm explaining. Okay. Are you able to see my screen very, very, very clear? Is the screen clear? Can you give me a yes in the chat if the screen is very clear? So let's start with this screen here. So this is your page. This is your home page on your Royalq. I told you, as a trader with Royalq, there are certain things that you should get used to. And we said that first, you need to understand this page of strategy. The page of strategy is where you set up your trades from, is where you give instructions from. This page of what? Of strategy. Excuse me. This page of strategy here. This is where you get to instruct. Who is that now? Don't touch my screen. Don't zoom. Don't touch my screen. Leave it. Are you not seeing things? My friend, don't zoom. You are disturbing me now. Look what you are doing. Don't touch the screen. Don't touch the screen. Don't zoom it. Just leave it. Okay. Are you not seeing? Are you not able to see what I'm trying to point at? Can you let me know if what I'm pointing at is not clear? So this is what I'm talking about. This part here. Do I disturb myself? Let me try to log in with Okay, you are seeing, all right. So this is the first thing I want you to really put focus on getting clear on. Okay, when you tap this page here, for the first time, if you have not yet traded, that page is going to be empty. Now, there is still someone who is touching the screen. And I know that one is a Ugandan. I know for sure that one is a Ugandan. Don't touch the screen. Let me just remove everything now so that you don't have what to zoom. I'm trying to make my sessions with you very, very easy. All right. So we shall just look at this one. So this is the page you see if you have entered a trade. And I'm going to start by explaining. Is there again another person? So someone asked me, Coach, what are the things I'm seeing? This is your trade. After you've set up a trade, I am assuming you have successfully set up a trade. On this trade, there are these things. There is number one. This is what you need to get clear on. First of all, this is the name of the coin. This is the name of the coin that you are trading. This down here is the price at which traders are buying that coin, that moment. Okay? Then here where you see positioning amount. This is the amount so far from your total capital that has entered the market, that Royalq has been able to enter for you in the market. All right? From your total capital. So if your total capital is $1,000, you are using 1,000. Out of 1,000, what you see on position amount is the amount so far that has entered the market or the money that the robot has bought the coins with, as so far used, as so far entered in the market. I hope that is very, very clear. Then, this positional quantity is the amount of coins, the quantity of coins that you've been able to receive from this amount. And each coin costed this money. This is the average price. Average price is how much you were able to get each coin at. Average price is how much you were able to get each coin price. Now, I need you to pay close attention here. All right? Average price. I'm going to explain this one here, what you see here. So this is it. There is unrealized P stroke L in bracket USDT. The recording is there. Halima, recording is on YouTube. The unrealized P stroke L stands for unrealized profit or loss. Why is it called unrealized? It is unrealized because the deal is not yet closed. Unless the deal is closed, it is not profit or it is not a loss. I've just mentioned the recording is online. Another person is sending request. So, every time this amount here, this price here, every time the current market price up here overtakes or goes higher than your average price, you are going to be in floating profit. Are we together now? Whenever the average price, I mean the current market price, overtakes your average price, here it will be plus. Where you see negative, it will be plus. You will be floating in profit. And when the current market price is lower than your average price, you are going to be in what we call floating loss or unrealized loss. This simply is trying to show you that your assets, these coins here, they have gone down in value. So, one of the ways to reduce this negative, your goal in the market, because the bigger this percentage is, this is 39%, negative 39. It means this person, when you look at this price, the average price of that person, it simply means he entered the market when the price of each coin called proxy was trading at 0.4660. And after he bought that coin, the buyers were still in the market and they pushed this price of the coin down to 0.2880. Now, this person has not yet made a loss because he has the coins. What he's going to only suffer from is waiting. And this is what he is going to discourage this person if he doesn't take time to understand how to deal with this. Some people, when this happens, they just stop the business when it happens on one coin. Others, they take time to understand what is it that I did that got me into floating loss that I could avoid. And the kind of strategy I shared with you lately is what I discovered in my own experience that caused me to be in abnormal floating loss. Now, here's the thing. Floating loss is okay. Just like a floating profit. No one complains. Coach, now my coin has appreciated. I am in a floating profit. Altogether. But when they see negative there, because it is something that, I don't know how I should explain it. People don't want to see negative. They are everywhere at that time, they are everywhere. Coach, they think the business has ended. But this is what I want you to know. Some people, they even leave the business. They stop. But they forget that the coin they bought is still their coin. This is one thing I want you to know. Get me clearly. The moment the robot buys the coin for you, you see, I want you to stop treating the business like a gambling business. The moment the bot buys the coin for you, you have bought an asset. Can you type for me an asset? Type for me asset. You have an asset. Those coins, you can even remove them from Binance or from your exchanger and keep them somewhere else. It is your mindset that is going to disturb you. One can say, okay, the coins that I have bought, for example, this person has 223 coins. You can say, these coins I bought them, but the price has gone down. Their value have gone down on the market. They may not sell now. So instead of stopping the business, take a lesson and say, okay, I am going to treat this as a long-term investment. You know why I'm saying that? Because the coins are with you. Don't sell your coins in loss. Because Royalq won't do that, but I know some people, when you get pressure, no wonder you always advise that the money for trading, let it not be money for rentals. Let it not be money for school fees of children. No. Put their money that is not having pressure. Don't use money for pressure. You want to double it in one day or 2 days or 1 week. In as much as the strategy I'm sharing with you, it edges you, there is a way it holds you, there is a way it prevents you, there is a way it reduces the waiting time and makes sure that you are making profit than being in a coin for a very long time. There is a way it reduces this negative percentage that you would have suffered from. The martingale strategy board, strategy, the double up strategy, it prevents you from that and makes sure that you are not floating for a very, very long time. If you use it the right way, altogether. But here's the thing. Don't sell your coins. Keep them and treat it that, okay, these ones, I have my assets. I bought my coins and I know they are going to rise. The coins are going to rise. As long as you look at that coin, unless it is a meme coin, I told you meme coins are the ones that have the habit of going to zero value. Okay? Meme coins, they are not solving any serious problem in the digital world, in the digital space. So it's just a coin that even you can come up with your own coin and call it Dr. Mlambia crypto. And the people who believe and follow you, they will start investing money in it, but they have a habit of pump and dump. So they go up and they come out. So you don't put a lot of money in those coins. Get big projects that are reasonable. That's why I recommended when you are trading, keep yourself among the top 100 cryptocurrencies. Keep yourself among the top 100 cryptocurrencies. Back to our topic. Don't sell your coins in loss, especially if you bought them with the previous for those of you who were here earlier, who joined the early days when I was just starting out. You are the ones that I'm talking to at this time. Now, for my friends who just joined, you don't have any problem. You don't have any problem. The one who is floating a loss, I believe the one who is floating a lot, you are not floating more than 20% or more than 30%. Let me make it 30%. And the coins that you are in, if you just double up, if you just do what I told you, if you are in negative maybe 30%, that can be diluted to almost 0% or 2%, and that will push you out of the market. Okay? So I'm going to repeat the martingale strategy, and we are going to see how best do we maximize this strategy and ensure that we are profiting and we are making money every single day. But on top of that, our capital is protected. On top of that, we are enjoying the business. Are you ready? Can you give me a yes if you are ready? Can you give me a yes? Give me a yes. Give me a yes. Give me a yes. Come on, give me a yes. All right. So this is what we are going to do. All right. What is happening with my whiteboard? The pen is very small. I want to increase it. I need to stop it first. Someone had reduced my thingy. Okay. So let us get another picture here. Another picture here. So we are going to do this. We are going to go to we are going to go back to our strategy. I told you that every product you see on the market, the people who understand it the most are the creators. The creator of a product understands it more than any consumer. The creator always understands their product better than any creator, any consumer. Do you agree with me on that? Do you agree with me on that? That including God, God understands you more than you understand yourself. The creator always will understand their product far better than any kind of consumer. So what does the creator of Royalq says that how we should use his product for us to make money. All right? Every time you go off the creator's mind, you get the opposite of the creator's expectation from his product. So when we come on the user guide of Royalq, this is what I want you to look at closely. We are going to visit the martingale strategy. And in the martingale strategy, I want you to come and take a look at this. All right? Start reading from the top there. It says, the underlying logic of spot martingale profitability is straightforward. The underlying logic of spot martingale strategy is straightforward. So we are looking at how do we make profit from spot martingale of Royalq, the spot martingale strategy of Royalq. So Royalq is telling us that making profit from our robot, our strategy, our martingale bot is simple. Okay, so he goes ahead and he says, select. So step number one is to select. Select a high quality asset, and if its value does not plunge to zero, you can profit. Number two, for example, then he gives an example. So we are assuming you have selected a high quality asset. So mistake number one that you are going to make, if you are going to make money from Royalq, mistake number one, if you want to make money from Royalq, the easiest mistake is selecting a low quality asset. This is why I stopped giving signals and I just told you where to find the high quality assets. I taught you what is a high quality asset. I taught you where to find it. I taught you how to even do a back check of it. This is what I'm going to repeat today for those of you who missed it. So the first step to making profit and to being sure that you shall make profit, even when the market goes against you and you have to wait, you have confidence. You see that peace of mind, knowing that this asset I entered, it will rise by all means. It's like someone who bought Bitcoin. Even if Bitcoin today goes to 50,000, they have confidence that Bitcoin will rise. Why? It has a big community. It is a high quality asset. Give me a one if that is clear. So the first mistake you make is selecting a low quality asset. Are we together? What is the repercussion of selecting a low quality asset? There are possibilities of that asset plunging to zero value. Plunging to zero value simply means that coin, the buyers or the investors are no longer putting money into it. So you entered it, you bought it, and it went down, and you will stay in that coin for a longer time. Because usually, the low quality asset, the investors don't have confidence to put money in them, a lot of money in them. So when they come, like the meme coins that I'm talking about, meme coins, they come, they pump, they dump. So people put in money and they remove money out of it. So the coin can go from $1 to $10, and tomorrow it is at $0.5. Those are habits of meme coins. And when it goes to $0.5, it can stay there for a very long time. Reason being, the investors are scared to put back their money in it. Reason being, because there is no any serious problem it is solving in the market. So they just put in money to remove. You put a 1,000. So when you are trading such coins, don't put in a lot of money. Some of them, they are already in the top 100. So you don't put a lot of money in those kind of coins. I'm going to take you to coin market cap, and I will still show you the top 100 coins, because those are the ones I recommend keep yourself into. And if the market is the way it is right now, where it has gone down, you keep yourself in the mainly top 30 coins, top 20, and those are the ones you trade. High quality asset. Reason being, when it goes down, you have confidence that it will come up. So even if you wait for it for a month, it is okay. You know that it will eventually rise because it has a big community. Give me a yes if this is making sense to you. So now, please don't touch my screen. Don't touch the screen. I will tomorrow, I promise you, tomorrow at 01, tomorrow, make sure you come. I'm going to open Zoom for you. And then you touch the screen all the time. You write everything you want in the screen so that you get tired. When you get tired, then you come back and we do the training the following day. Are you together? All right. So now, I hope we've understood. So the first step to profiting from martingale is selecting a high quality asset. Now, here is an example. This is how martingale strategy works. You buy a coin at $100 worthy of that asset, purchasing 1 unit. So your average price, take note, average price. Take note, average price. Your average price at that time is what? Your average price at that time, excuse me, your average price at that time is $100. You bought one coin and that coin is $100. Okay, let me just go back to my whiteboard to demonstrate this more clearly. But before I go to demonstrating this more clearly, let's make it clear how to find a high quality asset. Where do we find the high quality assets? High quality assets come here. Get this application here on your phone. The coin market cap. Okay? Have it on your phone and get used to it. Then, in the coin market cap, we find here the list of the coins, the top 100 coins, top 100 cryptocurrencies, or the top 100 coins that investors have put money into, that have the highest amount money in them. Are we together now? What determines the quality of an asset is how much money is in that coin. How much money have investors put in that coin? Give me a yes. Give me a 1 if that is clear. If you've understood that, give me a 1. What determines a high quality, the quality of an asset is how much investors have put into that coin. The bigger the amount, the higher the quality. The bigger the amount, the higher the quality. Okay? The bigger the what? The amount, the higher the quality of that particular asset. The bigger the amount, the slower the asset movement. The bigger the amount in the coin, the slower that coin moves. The slower that coin moves. I don't know if that is if English is Englishing. I don't know if English is Englishing. The slower, the lower the quality of the coin, the faster it moves. The lower the amount of money in the coin, the faster it moves. And what do I mean with that? What do I mean with that? Let's first of all get back here. So we see that we see the amount of money that is in each coin down here. Bitcoin has $1.57 trillion in it, followed by Ethereum right now with $190 billion in it. USDT, $144 billion. XRP, $110 billion. BNB, $79 billion. Solana, $55.4 billion. All right. Then we have Dogecoin. So now Dogecoin is a meme coin. So we have Dogecoin with $22.19 billion We have TRX, $21.59 billion. We have other $20.4 billion. So these are the top 100 coins. So if you are trading top 100 coin, you have confidence because these coins have big communities. They have money in them. They have people who believe in them. So when it goes down, we know it is just a matter of time. When it goes down, it will go up. Are we together up to that point? So selecting a high quality asset is the first thing to profiting in Royalq. So how do you determine the category of a coin? Is it a meme coin or what does the coin do? When you tap in it, before you trade it, you can tap, like I tap in link. Let us tap in Dogecoin number 8. Come here. When you tap in it, come and tap on about. About. So about section will give you the details of the coin. So this is what Dogecoin is all about. What is Dogecoin? Dogecoin is based on the popular Doge internet meme and features a Shiba Inu on its logo. The open source digital currency was created by Billy Marcus from Portland, Oregon, and Jackson Palmer from Sydney, Australia, and so you can read about the coin. You can know. If you want to go deep into it, you can come and read the white paper of that coin. White paper includes full details, why the coin was created, and so on and so forth. So this is Dogecoin. It's a meme coin. Okay? But this is a strong meme coin. So it may not give you sleepless nights, but still, I will tell you, if you are trading them, you trade them with caution, these meme coins. Okay? So if you tap on another coin, Solana, so this is not a meme coin. Come and read about. Solana is a highly functional open source project that banks on blockchain technology permissionlessly natures to provide decentralized finance solution. So there is a problem it is solving in the market. You can see that. Okay? Give me a yes if you've understood that lesson. How do you check the quality of the asset that you are getting into, that you want to trade? Give me a yes if that lesson is very clear. So you can read more about this. You can follow it on their social media accounts just to ensure that you understand the asset. So that when the price go down, you don't have sleepless nights. You just yearn to buy more. You just yearn to buy more. You can follow it and know, okay, this is the project. You see, you can even say, I told you meme coins are coins that they are just created for fun. They are created for fun, especially by celebrities. Okay? By celebrities. So someone come up with a coin. I saw there is someone who created his own coin recently. That man there's a Ugandan who has created a meme coin. Donald Trump recently and his wife, they created the meme cryptocurrency, their own cryptocurrency. Okay? You can even find their coin is written Jesus. There are a lot of coins here. Someone, if he can create a coin, there is a coin. Last time I was showing you, there's a coin called Jesus. Are we together now? You can search here. You will find coins called Ronaldo. This is Jesus. This is a cryptocurrency called Jesus. So if you believe in it, you buy it. These are meme coins. Are we together now? Ronaldo. I think Ronaldo is there. This is it. Ronaldinho. Ronaldinho. It's a coin, it's there. So if you believe in Ronaldo, if you're a fan of Ronaldinho, you come and buy. So those are meme coins. They don't have a particular problem they are solving any such problem they are solving in the crypto, people buy them for fun. They put money and they remove. They put money and they remove. I believe that is clear. Have I answered you? So those are meme coins. Okay. And I want to encourage everybody. Have these tools on your watch, on your phones. This is how you're going to educate yourself about crypto. Crypto is so much a research business. You should get used to doing research. Okay? So like a question Mr. Joff has asked me, you can put in here. I have ChatGPT, I have DeepSeek, these artificial intelligence. I ask them, what is a meme coin? What is a meme coin? And they will bring for me. And I will know. So this is just a by the way. I'm just encouraging doing research about this, but my time is up. So they will bring you. A meme coin is a type of a cryptocurrency that originates from internet memes, jokes, viral trends, unlike traditional cryptocurrencies like Bitcoin or Ethereum, which aims to serve as digital currency or platform for decentralized application. Meme coins are often created for fun, community engagement, and satire or satire. So they are community driven, they have low or no utility. They are highly volatile, meaning they go up and they go down fast. Okay, they have viral marketing. Those are characteristics of meme coin. Popular meme coin is Dogecoin, is the leading. I've just showed you. There is a Shiba Inu, there is Pepe coin, there is a Floki Inu. Okay, I hope that is clear. So utilize these technologies. You can ask, you get information about them. So I'm going to now take you back to our whiteboard, and I'm going to close my session this evening with we are looking at how to increase profitability in our Royalq. We said the first thing is you should select a high quality asset. All right, a high quality asset. That is step number one. And we have learned how to select a high quality asset. Now that you've selected a high quality asset, Royalq is telling us that in the example they are giving us, okay, I'm going to be reading here, then you will be following here what I'm sharing. So in the example Royalq is giving us, let's for example, you've bought a coin, you've bought one coin at $100. You buy one coin at $100. So this price here becomes your average price. I've already showed you the average price when we have entered the coin. So this is your average price. Now, after buying this coin, you bought one coin. The price go down. The price of that coin goes down. Excuse me. Okay. So you have bought this coin, and after buying it, the price goes down. It goes down from $100 and it comes at $80. This is the average, the market price. Okay. So we are going to do this. You enter a coin, you have entered it at $100, and then the price go down to something like $80. Now, at $80, this is what Royalq says. If you had bought one coin when the price was 100, all right? If you had bought one coin when the price was at 100. Double that figure. So you entered in, you bought one coin at 100. My interest is in what we call average price. What is our goal when we are trading is to keep this average price of ours to as low as we can. As low as we can. Because when it is low, when the average price is down, we move out of the market faster. The lower our average price is, the faster we get out of the market. The higher our average price gets, the more we take long in the market. The lower our average price is, the faster we get out of the market. The higher our average price is, the longer we take in the market. Give me a yes if that is clear. So average price is how much is the estimated value, is the value each of your coin is worth. So when you buy one coin, it means your average price at this point is $100. Okay? Each coin is valued at $100. But when the price goes down, the Royalq is telling us, buy 2 more coins. So double this price and enter, get 2 coins. So here you are going to invest how much? You are going to invest $160. Upon the price dropping, you invest $150. You put in $160. Keep bringing, you get how many coins? You are going to get 2. You are going to get 2 coins. Now, you had gotten 1 at first. Now you have 2. So what does that mean? You are going to add one equals to what? Equals to 3. Am I still there? Can you get me? Get me? Am I? What is happening? Are you people still getting me? Why do I always break towards the last moment? Hmm? Can you get me now? You can get me now? Okay. Zikomo kwambiri kyabwino mwebale nnyo kale tugende maaso let's get our whiteboard back. So I was here. I was telling you that our goal, always have a goal when you are trading. Is your goal to make money fast? Is your goal to win a trade? Your goal should win a trade, should be winning a trade. Okay? So our goal is to ensure that our average price, we move this. This is our current average price. If we enter the coin at $100, it means our average price is 100. But we want to ensure that we reduce this price. We reduce that figure. We bring it to something much smaller. Okay? That is our goal. We want to bring it to something much smaller. So we say, if we add 200, if we add $100 plus 160, that is going to bring us to 260. So total invested is 260. Divide it with total quantity received, that is 3, gives you a total of how much? How much is that? Can someone give me an answer? Those of you following? I'm trying to show you how average price is reduced. I'm showing you how 260 divided by 3. This brings your average price to 86.60 something. So it means at this point, all right, after making the second purchase, your average price has now reduced from $100 to $86. Give me a yes if that is clear, if you've understood what I've done here. Now that is how you are standing. But it happens that after you enter the market, after you buy the second purchase, the market continues to go down. It goes down. When the market continues to go down, from $80, which you bought the previous purchase from, the coin goes to $50. 50 what? Dollars. The coin goes to $50 from $80. The price has continued dropping and it is now at $50. So this is $50. So this is what you are supposed to do. At $50, in fact, from this point here, where you bought at 80, down to $50, the point where it says P, unrealized P stroke arrow, okay, it is going to be negative until the order is made again. From the point you enter the market at $100 down to $80, it means where there is a unrealized P stroke arrow, there will be negative 20 in bracket $20. Are you with me? So don't panic, because there is an order to be made when the price touches your prescribed point, when your margin call reaches. So when you see negative 20, Royalq is saying, don't panic. You have to buy again. Give me a yes if that is clear. Where there is unrealized P stroke arrow, if you enter the market at $100 and the coin goes down, and it will be reducing. If you had the capital of, let us say $1,000 on your Binance, okay? When you go back to check, estimated total value on your Binance is going to reduce with $20, meaning Binance will show you that your account balance is $980. it doesn't mean that you have made a loss of $20. Give me a yes if this is clear, because this also disturbs people. This $20 that is missing here is this devaluation that has happened. However, we know what we want. We are waiting for the market to touch our negative 20% so that the robot can enter another amount from our 1,000, reducing our average price. We are collecting cheaper coins as they go down. Am I making myself clear? Can you give me a 2 if this is clear? So now, the market has dropped to $50. When the market drops to $50, what do you have to do? Double up. Double up your figure and get 4 coins. For what? 4 coins. Double your quantity and get 4 coins here. It means you are going to need, this time with 4, you are going to need to put $200 in the market at this point. Are you getting what I'm teaching you people, my friends? So here we are investing $200. Now, how much is our average price? We come back here. 200 plus 160 plus 100. So 200. No. We start from the top. $100 plus 160 plus 200. Our total invested capital is going to how much? 460. Correct, Joe. Thank you. Now, how do we get the average price? Again, simple mathematics. Get total capital invested, which is what? 460. Divide by total quantity received. 1 plus 2, 3 plus 4, 7. So how much is the average price? We want to reduce this figure. We want to pull it down. Okay? How much is the average price? Can someone give me an answer? We want to pull this down. This is our goal. This is our goal. So the more we buy cheaper coins and bring them in the ones we bought earlier, the more we bring down the average price. So we are getting 460 invested capital so far, divide by 7. So our average price now boils down to 65.7. This is the logic. So we have reduced our average price to 65.7. What is going to happen now? Our average price, the new average price after making that new order, it is now $65.7. Meaning each of our 7 coins, they are valued at this price. Each of our 7 coins, they are valued at 65.7. Now, here is what is going to happen. When the market starts changing, when the market makes a reversal, let's move this. We have seen our average price is 65. Okay? Our average price is 60 what? 65.7. This is our average price. When the market now changes the beat, changes the direction, we are going to be happy. We are going to be happy. We are going to be happy. Of course, the market doesn't move like this. Okay? But I'm assuming, I'm trying to reduce the time I'm putting into this. The market changes the direction from downward trend. Now it starts making an upward trend. This is what you are going to notice. For you who has done dollar cost averaging and brought down your average price from $100 to 65.7, this is what is going to happen. The market price at that time, the last order you bought, it was at how much? It was at $50. You last made a purchase at this point here at $50. Your average price is 65. It simply means if the price comes somewhere, let me use another color. If the price comes somewhere here, hey, now the market has started moving. The moment it touches this line, this is where our 65.7 is. The moment the price just go a bit higher than this, anything above this green line, we are in profits. So what does this save us? It saves us the time to have to wait until the market goes back to $100, which was our average price in the beginning. So for you, the moment the market, maybe you are taking 3%, anywhere here, you are out of the market. Anywhere above this price, anywhere above 65.7, you are in profit. Can you give me a yes if you've understood that? Can you give me a yes if you've understood that? Can you give me a yes if you've understood that? Can you give me a yes if you've understood that? That is clear. Okay, that is beautiful. Now, coach, so what you have to know, you are going to pray. Play. You are going to play around with your first buy-in amount. Now, my question is, if after entering the market, your plan, so my first question is, if after entering the market, do you pray that the market go down or it goes up? After buying your first buying amount, do you pray that the market go down or you pray that the market go up? Answer me. After entering the market, what is your prayer? Should the market go down or it should go up? Some answers. Should the market go down or it should go up after entering? Some answers in the chat. The prayer should be the market should go down. But again, another question. If the market doesn't go down and it goes up, if the market doesn't go down and it goes up, do you lose anything? Do you lose anything? Another? Do you lose anything if the market doesn't go down and it just go up after entering? Do you lose anything? You lose nothing. Is your capital safe? Yes. Can you enter another coin? Yes. So this is where I'm saying that people with big capital, you are complaining, coach, I am not making good money. It is simply because after you entered with the first buying amount, let's for example say, now notice something about this example I've used here. This person has capital of $400, $460. Some of you have far more than that money. This person has more than 400, has only $460. Let me first remove this. I demonstrate what I'm trying to show. in an easy way. So anyone who is more than $1,000, I want you to pay attention here. This person has capital of only $460. Total here is $460. However, if the market go up after this person has entered with $100 and they are collecting 3% from the trade, the minimum profit they will make will be $3. Is that clear? With their $460, if the market just go up after buying the first buying amount, because this is FBA, this is first buying amount. If the market just raises upward, they will take a 3%. Now there is someone who is making very small profit here. And you are saying, coach, I have big capital. This is because your first buying amount is small. But before you change your first buying amount for a big amount, this is what you should be prepared for. If you want to change your first buying amount to a bigger figure, like this is a big one, this $100 is big. This is what you should be prepared for. If you have smaller capital, like this person, and now you want to make big first buying amount, you should be prepared to put what I call big drops. So from the first buying amount to the next purchase, the percentage down there, you can see that there is 20%. So it will take longer to buy. You are going to be in that, it will take long to buy. But if it buys, you reduce your average price greatly. If the coin has gone down by as far as 20%, that is the first principle. If you want to increase this percentage, okay? If you want to increase the first buying amount, then you should be ready to use big drops. Tomorrow, I'm going to talk about how do we determine the drops. How do we determine the drop? So the next drop, you can see that from 80 to 50, that was what? That was negative 30. From 80 to 50, negative 30. So in total, the market had to drop with 50% for the robot to enter this amount. 50%. And they just bought two margin call. This is margin call 1, this is margin call 2. This is margin call 2, this is margin call 1. Please give me a yes if you've understood that, then we close. So tomorrow, I'll be able to discuss with you how do we determine the drops. Have you learned something today? Give me a yes if you've learned something. We are not going to go beyond this. Have we learned something? Is the lesson very clear? Okay, so tomorrow 8 p.m. I will repeat this lesson. I'm going to continue by talking about to get the drop. How do we determine the drops? So make sure you connect on time. In the morning, 8 a.m., we are going on day number 6 of the 90 days growth challenge. I told you the 90 days growth challenge, my aim is to build leaders, is to raise leaders that we are going to build together. You can see that I'm the one coaching, but we want to produce people, mentors, coaches, leaders that are going to be doing this thing. So I'm duplicating myself in those people intentionally. So don't miss the morning session, 8 a.m. Always be around 8 a.m., 8 p.m. That is our simple system. I always try to make the lesson is as simple as I can. Did I complicate the lesson? Can you tell me? Are we together? So we are done. we are done for today. We are done for today. Thank you so much. We have questions. Is there anybody here with a question? Yeah. So tomorrow I think we'll look at determining the percentage, and then we shall also look at what's that? We shall look at practical now. I'll do the practical part. All right, friends, thank you so much. I'll give the microphone to Dr. Mlambia, my co-host, to wind up the session as he transits into his meeting with his team members. Thank you so much. Have a blessed night. Have a good night, and we meet tomorrow in the morning, 8 a.m. Thank you so much. Bye-bye for now. See you tomorrow. Dr. Jairus, please.